Hi, I'm Tim Moskal.
My name is Jim McKay, and we are peer educators for the University of Illinois Extension's Financial Wellness Program. Today's presentation, Staying on Good Terms, Managing Credit and Debt, will provide information that will help you make informed decisions when choosing a credit card, help you to learn credit wisely, and discuss some resources for help. Now, the most popular way to use credit is with a credit card. Tim, do you have a credit card?
I do. I have one, in fact.
And do you like using it?
I do like it for a variety of reasons. I think there's great upside to using credit. One being buy now, pay later. It's very convenient when using a credit card. If you make a purchase, you won't have to pay for it until the credit card bill is due. So you can have up to about 30 days depending on when you make your purchase. So it's a very convenient factor of credit to buy something today and not have to pay for it until later. Another great upside of credit use is to protect against fraud. So when you're using credit, you have extra rights that you don't have when you're using cash. So for example, if you buy a good or a service or something and there's a problem with it, or there's an issue, you can contact your credit card company and they can stop payments and investigate. So protecting against fraud is a good upside of using credit cards. Coping with emergencies, when, say, your car breaks down and you don't have cash readily available, or you have a household issue or something that you need cash for right away and you don't have it on your hands. So coping with emergencies is a great upside of credit use as well. Credit use is also very convenient for making reservations. Typically you need a credit card to rent a car or a hotel room. So making reservations is a good upside of credit use. And then lastly, establishing favorable credit history is a good upside of credit use. Obviously using good behaviors will in turn get you a favorable credit history. So, employers, insurers, landlords, creditors, they all use your credit history and your credit information to make judgments on you. So whether you're applying for a job, they're going to look at your credit history and see how you're doing. If you're trying to rent an apartment, your landlord is going to look into your credit history to see if you're going to be able to make the rent payments. So, establishing a favorable credit history can really help you if you want a car loan or you're trying to get your first apartment or whatever it may be. So it's important that you try to establish good credit history by practicing good credit behavior. And it's also important to remember that no credit is better than bad credit. You always want to keep that in mind. So, and then talking about credit history and your credit information, there's three main credit bureaus that collect information on you. There's Experian, there's TransUnion, and there's Equifax. And these three bureaus collect information on you, and you can get a free credit report from each of them once a year. So you can get up to 3 free credit reports a year. So again, establishing favorable credit history and making sure that you check your credit history too. You want to go to these credit bureaus and you want to get your credit report at least once a year to see how you're doing. So then from there, I wanted to ask, do you have a credit card?
No, I don't.
Why not?
Well, personally, I don't like using credit cards because of their downsides, so I just stick to using my debit card.
What are the downsides?
Well, one downside to credit use is that it makes overspending easy. If you use your credit card a lot, you can end up spending more than you can afford. And it's not just a lack of discipline. Research has shown that when people look at a credit card logo, it makes them want to spend more. So, plus, I've heard stories about college students who have used credit cards for making almost all of their purchases, and they've found themselves up to $10,000 in debt before graduating. I hear stories like that and it scares me. So mistakes like these, they're going to stay on your credit report for many years to come, so I try to stay away from them. Another downside is that they are vulnerable to fraud. It's easy for you to lose your card. Someone could steal it or find out your credit card number. They could rack up thousands of dollars worth of charges without you knowing. And by the time you realize, you're going to have to put in a lot of time and energy to get these corrected. Also, you can easily have your identity stolen. Another downside But the big downside for me is the fees and interest. Like, they can be very costly. You actually have to pay for using credit. The cost is your interest, or the annual percentage rate. The APR is the cost of credit on a yearly basis, given as a percentage rate. So, for example, if you have a single payment 1-year loan of $1,000 with a finance charge of $140, your APR will be 14%. It's pretty simple. Knowing your APR makes it easy to compare between items, because the lower your APR, the lower your true cost will be. There are also additional fees you have to look out for, such as annual fees, transaction fees, application fees, fees for cash advances, late payments, or going over the credit limit. And all these fees, they can add up very easily. So it's important, for you to read closely, look at your credit application, as well as your monthly bills that come in the mail. So, Tim, have you looked at your credit card bill lately?
You know what? Usually I never look at it. Other than looking at the balance on the statement, I rarely ever look at it. But luckily enough, I did take a glance the other day, and I noticed that they raised my interest rate up
Really?
to 19.8% on me. And I wasn't aware of this.
Does that concern you?
Personally, it doesn't concern me, only because I try to pay my balances in full every month. So, I'm not rolling over balances to the next month. Therefore, I don't have to pay interest. So, while technically that 19.8% doesn't really concern me, because I try to practice good behaviors and I try to pay off my credit card every month, it was just a surprise to see, though. But if I, did happen to carry over a balance, like I said, I would have to pay that interest rate on that balance, the APR. So, if you go over the limit, there's other things to pay attention to other than the APR. You have to pay attention to over the limit fees and default terms and all the other fees that you mentioned. And also, if you pay late, you have to pay attention to that APR and late payment fees and default terms. So again, the 19.8% doesn't personally affect me, because I try to practice the good behaviors of paying off my balance in full each month.
Yeah, you're right, Tim. That's true. I know the mistakes that people make that kind of get them into those difficult situations. So it's important to avoid some of these credit mistakes, mistakes such as overspending. You really need to pay attention to your credit limit. And if your credit limit is over what you want it to be, you can simply call up your credit card lender and ask them to lower it for you. Another credit mistake is holding on to too many credit cards. With too many credit cards, it makes it tempting to spend more than you can actually afford. Right. It also makes it harder to get more credit in the future, because lenders will look at you, they see you have, a bunch of credit cards, and they will think that, you will handle more debt than you can actually handle. Another credit mistake is if you only pay the minimum balance. When you do this, you're basically carrying a permanent balance. Right. And these large permanent balances, they can increase in amount. They can increase your amount of interest to 2 to 3 times more than what you would normally spend. And these balances, they can easily be paid off, but it's just you have to have the willpower and the desire to stay focused and do it. Another mistake people often make is assuming that their low interest rates will stay the same. Many lenders entice their consumers with low introductory APRs, and however, these rates can change after a certain period of time, usually around 6 months. And assuming that they won't change will cause an unpleasant surprise when you realize they do. Right. So you should definitely, check out your credit card bills in the mail and make sure they are what you expect. There are even credit cards out there with variable rates, where the lenders can increase the rates as the interest rates in the economy increase. And also, credit card companies, they can review your credit report at any time. And if they see something they don't like, they will raise your interest rates. Right. So, Tim, what kind of purchases do you make with your credit card?
Well, generally I try to keep my purchases relatively small.
Mm-hmm.
You know, whether it's groceries twice a week or whether I'm going out to dinner at a restaurant and, you know, I'll use my credit card. So typically purchases like that, that's what I try to do with my credit card normally, just so I can keep, you know, the balances manageable and so I can pay them off every month. But most recently, I had to buy a textbook for one of my classes.
Oh, yeah?
I bought this big old textbook.
How much was it?
It was $50.
$50.
So, yeah.
Oh. I got a little chart here if you want to take a look. So you see with your 19.8% APR, if it took you 1 year to pay off the balance on this book, you'll actually be paying around $60 with the interest.
Right.
Now, you know, another $10 isn't too bad for the privilege to buy now and pay later. But let's say you get lazy and it took you 5 years to pay off your balance. You'll end up spending around $133. And if it took you 20 years to pay off the balance, you'll end up paying over $2,500.
Wow.
Now, obviously, no one plans to take 20 years or even 5 years to pay off their credit card balance. But if you don't plan, this could happen.
Yeah,
So,
definitely.
Yeah.
So yeah, I mean, those are the common mistakes that you went over. You know, they happen a lot. But with that being said, there are a lot of good behaviors that you can practice while using credit. One, for example, is paying more than required, paying more than the monthly minimum payment. So, you know, a rule of thumb is to try not to fall into that monthly minimum payment trap. I'll show you an example here of the difference it can make by paying just a little bit more than the minimum. If you see here on a balance of $3,000 and the minimum payment due is $90. If you only make that minimum payment each month, it'll take you nearly 11 years to pay that off. And then that'll cost you, that $3,000 balance that you have, that'll end up costing you nearly $5,000, $4,745 total on that $3,000 if you only pay the minimum each month. That's because you're paying interest every month and it just keeps rolling over. On the other side, if you pay $103, which would be only $13 more per month, you would pay off that $3,000 balance in 3 years. And it would only cost you a total of $3,712. So by just paying $13 extra per month, you would save about $1,033 on that. So, you know, it's a very important point to make, paying more than the minimum each month if you can do it. So yeah, then I just wanted to ask you, you know, what are some other credit behaviors to avoid, or, you know, signs that you are in fact in credit trouble?
Yeah, well, credit can easily get students into financial trouble. It's important to realize that when you get into credit trouble, you take the immediate steps necessary to reverse the trend. So here are some signs that you may be in credit trouble. If you are maxing out your credit cards or charging up to the credit limit without knowing, I mean, that's an obvious sign that you're in trouble. However, if you're using your one card to pay off the balance on another card, you're basically just playing a dangerous financial game that will probably end up with you maxing out more than one credit card. While these credit cards will write off your debt, it will stay on your credit report for 7 years, and it will make it harder for you to get low-cost credit in the future.
Right.
Not knowing your total debt is also a sign that you're in credit trouble. Your debt must be monitored at all times.
Right.
Otherwise, it can easily become larger and larger and get out of hand. Another sign of credit trouble is if you're getting frequent cash advances. Many lenders charge extremely high interest rates and transaction fees for these cash advances, and they can add up to a lot over time. So we've all had times when money is tight. Now, Tim, what are some things you can do to get out of trouble?
Well, you know, as long as it doesn't happen too much, your lender will understand if you can't make a payment on time. So the most important thing you can do if you find yourself in that situation is to talk to your creditor. You know, pick up the phone, give them a call, let them know what's going on, let them know your situation, and you know, that you won't be able to make the payment on time. You know, not only will your relationship improve with your creditor by doing that, but you know, you also might be able to work out a payment schedule, something that'll work out for you. So, you know, some things to keep in mind if you're considering talking to your creditor, which you definitely should if you find yourself in that situation. you should ask for a lower interest rate. Obviously, that would help you a lot in terms of paying off the balance. You wouldn't be paying off as much in total. So, ask for a lower interest rate. That's number one. You could also ask for a lower credit limit. Just because, you have a $1,000 credit limit doesn't necessarily mean that you can afford $1,000 each month on your credit card statement. So, maybe ask them to lower it to 500 or, whatever you feel comfortable with. And doing that, might prevent you from overspending and overcharging. You can also ask to change when your bill is due. So, depending on your situation, if you get paid, at the end of the month or, if you need a little extra time, just, pick up the phone, talk to them, and then ask if, you can change the due date on your bill. And then, most importantly, and, the big picture here is just discuss your situation with them. And then hopefully you'll be able to set up a payment plan and something that works for you and, something that they're okay with. Because, lenders want to keep you as their customer and they'd be more than willing to negotiate with you.
Yeah, Tim, many people find that they need help in getting out of debt. And if this happens to you, you can easily get assistance from such companies as Consumer Credit Counseling Services. They offer budget counseling and debt repayment plans, among other services. And under these debt repayment plans, you agree not to use your credit card anymore. And in turn, these debt counselors will talk with your credit card lenders and try to rearrange smaller payments and less interest rates and fees. And what ends up happening is you will pay the debt counselors, who will then pay your creditors. And after all of this has been completed, when you're done with your repayment plan, creditors will usually remove that information off of your credit report. So that's definitely a good thing.
Right. So yeah, Jim, in order to avoid a situation like that in the first place, in order to stay away from the debt counseling services and, the repayment plans and having to talk to your creditor, there are some simple steps to success that you can follow, in order to practice good credit behaviors. So one, would be, even before you get yourself into credit, would be to shop around for good interest rates. Not all interest rates are the same. Just because, one card has Visa on it doesn't mean that another card from a different bank that says Visa on it is going to have the same APR. Most likely they're going to be different. There's tons, they all have different rates. So, it's important to shop around for good interest rates because, why would you want to pay more than you have to if you happen to carry a balance from month to month? So again, finding a low interest rate would definitely be helpful in that regard. Another step to success would be to read the disclosure statement. You want to read the fine print and the long paragraphs, no matter how boring they may be, because you don't really know what's in there unless you read it. Like you mentioned, they could slap you with a bunch of fees that you're unaware of, and it would come as an unpleasant surprise. So again, you want to read the disclosure statement. You want to read the fine print because you really want to know what you've agreed to once you enter into a contract with a credit card company. Probably the most obvious step to success would be just to pay your bills on time. Obviously, if you can do that, then you're not going to find yourself in trouble. And there's only upside to using credit. And, it's only going to help you, like I said, whether it's getting an apartment or getting a car loan or increasing your credit limit and, so on and so forth. So, pay your bills on time. If you do that, you'll be fine. Another step to success would be to pay off debt payments with the highest interest rate first. And this is regardless of the balance. So, if you have $400 on one credit card and only $100 on another, and if the $100 has a higher interest rate, you want to pay off, the lower balance first. No matter how tempting it is, just to get that $400, off your back. You will always want to pay off the credit card with the highest interest rate first, regardless of the balance. And then finally, this goes with paying your bills on time, but if you can't pay your bill in full every month, you still want to pay as much as possible. I showed you the example of, the minimum payment trap. of how just an extra $13 a month can, knock off 8 years or thousands of dollars. So, it's probably the most important thing you can do is, just to remember to pay off as much as you can on your credit card bill every month.
Yeah, those are some great points, Tim. There are definitely some behaviors I'll try to follow in the future when I eventually get a credit card. So thank you, everyone, for listening to our presentation on managing credit and debt. Again, my name is Jim McKay. This is Tim Moskal, and we are peer educators for the University of Illinois Extension's Financial Wellness Program. If you are a student and ever have any questions on any financial topics, or you need one-on-one assistance on campus, you should contact us. We are located in the Wellness Resource Center in the lower level of ARC. You can visit us on the web at fw.extension.uiuc.edu, and you can find us on Facebook and Twitter. Thank you very much.
Thank you.